Everyone, welcome to 3Q FY20 result conference call of V-Guard Industries Limited. Today we have from the management Mr. Mithun, Managing Director, Mr. Ram, Director and Chief Operating Officer, and Mr. Sudarshan, Senior VP and Chief Financial Officer. Now I would like to hand over the call to the management for opening remarks, post which we can open the floor for question and answer. Thank you, and over to you, sir.
Thank you, Ashish, and thank you, Ambit, for hosting this call. A very warm welcome to everyone present, and thank you very much for joining us today to discuss the operating and financial performance of our company for the third quarter ended 31st December 2019. During the third quarter, which included the annual festive season, consumer sentiment continued to be sluggish and demand outlook remained challenging across most of our product categories. Under these circumstances, products such as fans and water heaters delivered double-digit growth, while other products where the demand can be potentially subject to postponement delivered weaker growth. We continue to diversify the revenue profile by expanding contributions from a wider range of products as well as growing non-South markets by leveraging existing investments in brand marketing and distribution. We have also been moving towards premiumization of the portfolio and are seeing the benefits from this exercise starting to accrue in our brand positioning and improving our margins profile. Overall, our strategy has been to consolidate presence in the established markets, expand market share in new markets, while at the same time increasing our engagement with modern retail and e-commerce channels in specific product categories. While these distribution channels currently make a small contribution to revenues, at present we believe there is potential to expand these further over time. We maintain strict organizational discipline across functions, including control over working capital in tight liquidity conditions and containing operation cost inflation. Resultantly, revenue growth of 5.4% in Q3 delivered year-on-year EBITDA margin expansion of 190 basis points to 9.5%, while profit after tax increased by 27% to 42.9 crore. We continue to see margin expansion across all our key product categories, which will be a function of volume, growth, premiumization and cost effectiveness. During the quarter, net cash position improved further to 323 crores despite the annual dividend payout based on higher operating margins and stable cash conversion metrics. As a result, the company's operations continue to deliver superior returns to stakeholders. ROE and ROCE were at 21.0% and 25.5% respectively at the end of Q3 FY20 calculated on trailing 12-month basis. Going forward, in the near term, we expect to see gradual pickup in demand growth. However, over the long term, we are confident of achieving top-line growth trajectory of 15%, driven by expansion into non-South markets and introduction of new product categories. We have undertaken several business strengthening initiatives and will continue to add 3,000 to 5,000 retailers across the country every year with higher addition in the non-South region. We have put in place the best-in-class processes and systems to create the bandwidth for the company to transition from a leading nationwide brand with high-quality products in the consumer electricals, electronics and consumer durable space that have a strong salience in the minds of consumers. Overall, we see V-Guard brand being well positioned to benefit from the turnaround in the macroeconomic sentiment in the country. On that note, I would like to thank you once again for your participation and would like to hand over the floor to the moderator for question and answers. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Bhartiya from Investec. Please go ahead.
Hi, good afternoon, Mithun. My first question is on the demand environment. Just want to understand from you, is it getting better or is it getting worse? And within the last quarter, how did you see, were the exit run rates better than what we saw maybe in October? a related question, are you also seeing dealers in the channel reducing their inventory levels, and has that situation stabilized?
So I think the environment continues to be, challenging. Having said that, maybe December and January we have seen a little bit better pickup in numbers than the earlier months. I think we'll have to wait and see, because I think 1 or 2 months is not enough for us to read how the environment is going to behave. We will have to wait for a few more months to see whether consistent growth will happen. Yes, retailers are not willing to take any risks, so they are also, ensuring that they are working with the minimal inventory. They are also, become risk averse, and they are also not having access to capital in terms of loans, etc. So they are constrained in that sense of working capital. And that's not a new issue, but it's continuing, and there is no change in that sentiment as of now.
In this kind of a scenario, Mithun, how is our channel financing schemes working? Are you seeing banks curtailing their excitement towards channel financing?
No, channel financing, the banks are ready to give, because on the basis of the company's, assurances. But channel financing cannot be the only means of finance. Channel financing could be maybe, cater to maybe 30% or 40% of the, that firm's capital requirements. The rest has to be raised by the, the firm itself. So what we are seeing is many banks are not willing to increase limits, to customers, and thereby they're getting affected. So channel financing, we are not seeing much change. Banks are still ready to give and all that. But other sources of finance is of course impacted, and many of them are also having other businesses, like, some of them are into, many of the trade partners, they dabble in real estate and all that. So they also have money stuck up in various things like that.
Understood. And lastly, Mithun, how's been the competitive intensity in last few months? And have you seen your peers resorting to price cuts or higher dealer incentives in order to boost their growth?
Yeah, so definitely we are going through a hyper competitive environment. We have seen several brands slashing prices, so that they can boost up their volume growth. And that's continuing. We have seen that significantly in the water heating category. We are seeing that in the fan category as well. And we are also seeing it in the switchgear category. So these three categories, we are seeing price cut and hyper competition across.
And despite that, in fans and water heaters category, we managed to deliver double-digit revenue growth.
Yeah, so I think in the case of water heaters, we had some new launches. We also, there was some softening of raw material prices, which helped us to pass on some of these benefits to the trade partners, which helps to drive volumes. The winter season was pretty good. So I think all these factors, helped us to achieve the water heater numbers. In the other cases also, see, what is happening is, from 5 to 6 brands in a category, today we are having 15 to 25 brands in each category. So there is really, no shelf space for all of them to exist in the market. So many are getting desperate and, cutting price. So the top 2 or 3 brands in a category may not do that, but the rest of them will do. So it's something that we have to live with. But we have actually would have foregone some sales because we have not participated or responded to some of these things. So we definitely have lost sales in water heaters in the first 6 months of the year. We have definitely lost sales in the switchgear category because we have not resorted to this kind of aggressive price cuts. Even in fans, we have not resorted to any cuts. So I think you will see that even with only a 5% volume growth, our margins, both gross and EBITDA margins have actually improved. That's because we have not, responded too aggressively to some of these actions.
Understood. That's helpful. Thanks, Mithun.
Thank you. The next question is from the line of Prashant Kuti from Sundaram Mutual Fund. Please go ahead.
Yeah, thank you for the opportunity. Just on this gross margin part, while you said that obviously the stabilizers part of the business usually helps in improving your gross margin profile, that has not really grown that much. So going into the season, are we probably hopeful of a relative improvement in gross margins from here on?
So gross margins have gone up not only in the stabilizer category. There's gross margin increase has been across. So only in the month of December, I would say, towards the fag end of December, we started to see some increase in raw material prices. But now, after the recent news and recent gloom in the market, even raw material prices have started to correct again. So I think definitely this kind of gross margin should be maintainable for us going forward. Because the increase in gross margin is not only in stabilizer but across all categories.
Just an extension to this. So when you're saying that within a quarter when gross stabilizers doesn't do well, we almost report a 33% gross margin. I understand the materials have been benign, but on a full year basis, is it 30 to 33% kind of a sustainable number incrementally?
So I think if you look at the quarter mix can be different quarter to quarter, so you can't look at it as an absolute. But the improvement over last year will sustain.
Okay. Is it also to do with the fact that non-South, the gap is completely reduced now? I mean, is any of that factor also playing?
That hasn't changed much in the last 1 year. I mean, it's like the two have been fairly close. So I think there are few things. One is the product mix itself is changing. So we have launched categories in the last 4 years. Which are having a significantly higher gross margin than the company average, or having gross margins higher than the traditional categories, barring maybe a stabilizer. So I think definitely as those categories become larger, you will see that effect playing out in the product mix. So that is one reason. The second is some reduction in the RM prices that happened. This is the other reason.
Okay, sure. The second question is on the. You just spoke about this hyper-competitive environment, and you said that there is a lot of undercutting which is happening in the trade. Suffice to say, we would have lost market share in the categories which we are highlighting, despite seeing good growth?
See, if you look at us in water heaters, definitely in the first 6 months, we would have lost some share. I think that we have come back strongly in the third quarter, helped by some new launches and, some response to price cuts also we have done, but not to the kind of extent. For example, something like water heaters, I don't want to name any brand, but there is a well-known brand which has cut prices by 10 to 15%. So there is like almost a 20% price difference between us and some brands. So I think those kind of discounts are unsustainable for anyone. And so we are not, we have resisted. So some trade partners who are, opportunistic and wants to make a quick buck have all jumped and moved, to these kind of brands. So this has been going on. It's not a new thing, but it has aggravated more in the third quarter.
Is it because of the fact that, since you said there are a lot of players now coming up in all of these categories, the raw material cycle is benign and pretty much everything has been passed on to the consumer? Is that becoming a new trend right now? Because we've been hearing it for a while now.
No, I think it has nothing to do with raw material prices. I think fundamentally, companies have made a call to broaden and expand their portfolio. The shelf space is limited, and the fight to acquire shelf space sometimes, gets bloodied, particularly, when you are looking in categories which are seasonal, because otherwise then you have to carry the inventory longer. But in this instance, for example, the kind of price cuts we have seen in a fan or a water, it has even been before the season has begun. So I think, I would say some brands are feeling the pressure and the need to build some threshold size. I think it's not sustainable, and I think that, maybe, it will be difficult to stay there. In the short term, of course, we have lost, and that's where our loss was in the, first half. But, of course, we are quite capable to protect our turf, and, we will respond to do that if it is necessary. But that means then all of us lose money in the market, right? So
there's also one more thing. So what happens is most companies have a dominant category. So the dominant category, because of benign raw material prices, may be supporting the kind of aggressive price cuts which are taken. So if I'm having 90% of my business coming from a dominant category, my 20% price cut on the balance, 10% of the business may not affect too much on the overall number. So that also, is masking some of these things.
Lastly, any one-off in employee costs?
We don't have any one-off this quarter. Only last quarter in Q2 we had a one-off right back.
Okay, so this is a more sustainable employee cost number.
Yes.
Thank you. Thank you very much and all the very best.
Thanks.
Thank you. The next question is on the line of Renu Paid from IIFL. Please go ahead.
Yeah, hi. Good evening, sir. My first question is just to understand a bit more in terms of the growth outlook and the weakness that we have seen. It's been a couple of quarters that we have been in that mid-low single-digit range. And your commentary on demand offtake also is not as encouraging. So, do we see growth coming back, not just because of structural pickup in demand offtake from consumers, but also we have now 2 quarters where seasonal products will probably kick in, and there the demand elasticity is slightly different than compared to the typical demand elasticity which we have from housing and building material segments. So what would be your view in terms of growth as we look in terms of the next 6 to 12 months? Should growth rate improve optically from the lows that we have seen in the second, third quarter?
So I think, yes, Q4 should be better. Q4 and Q1 are typically stronger quarters for us. So if we don't have any untoward, weather-related issues, we have a reasonably warm summer. I think Q4 and Q1 should do well. Yes, the building material segment, especially wires and cables, which is the bigger, product category in that bucket, there the demand is not weather related, but more of structural. So there we are continuing to see pressure because of lack of, demand for, construction related products.
So then should one expect that growth could be inching back to double digits because of the seasonal products, or it will still hover the way it has been in high season?
So I think at this point it's very difficult for us to make a comment on, a forward-looking statement, but I think if Jan is an indication, things are looking better, and the contribution of seasonal products, especially the summer categories, are higher in Q4. And last Q4 and, last year Q4 and this year Q1 has been quite strong. We are hoping to repeat that kind of a performance.
Sure, which is interesting. Second point is, as in we saw in the budget, import duty across consumer durable segments, especially the appliances, have been increased from 10 to 20% levels. So if you can help us elaborate, what is the kind of import content that we have within the durables business portfolio, and do you think in the current competitive environment where pricing has been pretty tight, this could further put pressures on gross margins or market share?
If you look at the entire company, the total import component, especially in the categories you have mentioned, is about 8%. So around 8% is the import, component in that,
the appliances segment, which
and the consumer durable segment.
No, it's 8% of total company.
8% of the total company.
And for
Out of
the
that,
segment, how large would it be?
so in durables it will be higher. Definitely it will be like something like 25 to 30%. So for example, 30% of fans, 25% of water heaters, maybe 25-30% of kitchen appliances, they're all imported. Yeah.
Okay. So do you think there would be a probability to do more of local sourcing, or overall market will see the pricing level itself getting adjusted to the new increase?
So in some categories like water heaters, we've already taken a call to replace imports with local sourcing. So as we speak, we are in the process of transitioning a lot of the imported models to India-made models. And by next financial year, that transition will be complete. So, but there are certain categories where we don't have scale in the country. So, for example, pedestal fan is a case where we have to again reevaluate in the current light. It was not making sense earlier, but if it makes sense, so we'll have to do an evaluation and see, depending on our volumes, our size of the business, our ability to have the right ecosystem in the country, because there is no point in simply importing spare parts and just assembling them in India. It will not make any sense. So if the ecosystem is there in the country, yes, and with the current taxation structure, if it's making sense, definitely. So in the case of water heaters, definitely we have taken the call last year, and even without this tax, we were planning to move it into the country. Kitchen appliances, partly it's made in India, partly imported again, now we'll reevaluate. So I think each of the categories we will reevaluate, depending upon the availability of the right supply source, availability of components. We'll evaluate whether whether it's making sense to make in the country. In some cases it will, and in some cases it may not. I guess in the smaller categories it probably will not, because we'll be subscale.
Correct. To that extent, the impact will not be there. And overall, on the margin side, if we, as in going forward, if volumes are to be at the levels which we are anticipating, just teens, what could be the levers to improve margins? Probably gross margin sustained improvement might not be feasible given the market is competitive and one might have to pass it on with a lag to the market. So you think margins that we are looking at the current levels are broadly where they should be sustainable, or there could be levers because of improving product mix or other elements as well?
So I think, there are two parts to this. There is gross margin and there is EBITDA. Yeah. I think gross margin, whatever levels we have reached, we can maintain. We have an internal long-term program to improve our gross margins, and as we have been doing, over the last, 5 years, we have improved our gross margin by 5-6 percentage points. And similarly, we will continue working on it, as Mithun was saying, on the basis of, our changing product mix, and also, initiatives on the cost improvement side, mainly through procurement, moving to manufacturing and all those things. So I think the gross margin improvement, the long-term journey, right, will continue. Maybe, one or the other year, like last year, we were stressed and our gross margin was flat, as, the commodity and currency impact, traveled to market more slowly. So that, is something, which is a function of market dynamics. But I think broadly, I don't think there is a concern on the gross margin side. EBITDA side, yes, since, the top line is uncertain, right? So of course, there is, there can be some fluctuations in EBITDA. But my sense is, I think last year has also been, that is the year that we are running, has also been challenging for us and others in the market. So I would assume that, companies will tend towards passing on the, pricing challenges. The challenge arising from, lower growth, by trying to correct the fixed cost through pricing. So maybe I think the probability that, there will be a drag, maybe, not as strong as it would have been for the current year, actually.
Yeah. Okay, so that's interesting. Thank you so much and all the best.
Thank you. The next question is from the line of Sonali Salgaonkar from Jefferies. Please go ahead.
So thank you for the opportunity. So my first question is, in view of the situation in China right now, do you foresee any impact on the supply chain or procurement from the industry perspective, or be it your end users?
So I think fundamentally, there are some full value items which are, finished goods, which we source from China. There, I think, as far as we are concerned, we are kind of almost protected till March. As you all may already be aware, China manufacturing has been closed for festive period, and, that closure has been prolonged for another 15 days now. I think certainly, in summer categories, I think, there is likelihood that, there will be pressure, if, the system doesn't open on 15th, you can expect that there will be some pressure. There will definitely be pressure, in my view, because it's unlikely that, people are carrying inventories, for April and beyond. And probably even some of the inventories are on sea, and, since the documents are negotiated through banks, it's even possible sometimes that clearing this may be an issue. So I think we will get a better picture by around, in another 15 days, on this aspect. Component again, there are a lot of electronic components, which are imported from China. There are some chemicals also, which are, imported from China. I think, where they have global scale, I think these can get disrupted. Right now, I think most companies are, at least we are covered, as I said, till March, and there may be some, component inventories with distributors, of global or, Chinese companies or global companies in India. So these, should allow us to cover maybe till about April, but definitely, if things don't get better by 15th of February, I think some disruption will come.
And which particular categories, summer categories are we mentioning here right now?
If you look at full value items, table, wall and pedestal fans mostly are imported into the country. If you look at kitchen appliances like induction cooktops, rice cookers, if you look at the glass, for the glass cooktops, they're all coming from China. And in the case of components, it's primarily electronic components, like Ram mentioned, and maybe some things like chemicals, plastics, etc. are also coming from China. Electronics, I think, mostly without China, I think the China, supply, the entire world will have issues because many key components are only made there today.
Got it, sir. My second question is, would you be able to give us an approximate absolute market share in the key appliance segments that we are in?
Okay, we'll try and do it offline. We don't have it right now with us.
Sure. So, and my last question is, how should we look at the steady state ad spend to net sales? Because this quarter we are at 5%. Should we expect the year to close at somewhere between 4.5% to 5% or lower than that?
Yeah, full year will be about 5%.
5%. All right, sir. That's it from my side. Thank you.
Thank you.
Thank you. The next question is in the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hello. Hi. Nitin, just one clarification. When you said that Jan is somewhat, seeing some signs of growth, is it something growing faster than this quarter's growth, or is it some indications you are getting? I just got confused. You said higher growth, I thought, from this quarter average. You were saying you're seeing some growth, and if you're seeing that, so eventually this would be higher than this quarter's growth. How should we take it?
So I think, we can't talk about Jan right now because we are yet to complete the quarter. Mm-hmm. But what I can say is that, yes, both December and Jan has been more, positive compared to October and November.
Okay. The question, the specific previous question was, are things getting better? So our answer to that was that probably, we felt most challenged in October and November. Okay. In fact, I think it was, September, October, November, these 3 months were the most challenging months. Yeah. Mm-hmm. In relation to that, December was a bit better and January was similar. But I think, so that's the limited observation.
Yeah, it's just very difficult to predict. I just want the clarification. I heard it correctly or not. I got the answer. Second question is with respect to, as you, Kerala is the only state where, 3-4 cases have been reported of this coronavirus issue. Yeah. Any panic there in terms of, end market slowing down, or is just the announcement?
So I think this is still a very early days, so we have to actually look at the context. I think close to 17,000 people, globally has been affected, and 3 in India, and all the 3 cases have been so far identified in Kerala. Mm-hmm. I think more cases will come out in the other parts of the country. But the good news is, what I've come to know is all the 3 are, coming from the same university or something in China, so they were all infected probably from the same source. So that is the only information we have right now. As of now, there is no panic, but we'll wait and see. At least good news is at least we are able to, they're at least catching this and isolating these people. So then probably chances of it further spreading may be less. As of now, maybe it's too very early to say. As of today, there is no panic or anything, but it's maybe also very early because it's only the last 2-3 days this news has been coming out.
So, one more point, right? So Kerala had this Nipah virus issue also earlier, right? So they have some experience in dealing with these kind of things. Mm-hmm. And so what I understand, and this is what we read from papers, yeah, they are observing, all affected parties, and they are quarantined, and, they are observing them. And probably, the the feedback is traveling much faster because the mechanism of monitoring is also there. So we'll know in some time.
Got it. Thank you. Thank you.
Thank you. The next question is on the line of Hitesh from ICICI Direct. Also reminder to our participants, if you wish to ask a question, please press star and 1.
Hello, sir. Thank you for the opportunity. Sir, in your opening remark, you said the product contribution from the premium products has been increasing, and that is the one of the reasons to gain the gross margin. Just wanted to know if you can share how much is the total premium product revenue out of the total revenue. If you could share that data.
We are not giving category level details.
Not a category level, sir, but overall, if you could know how much
I think, we don't have an internal segmentation of premium, medium, and popular. I think the general point that Mithun was making is that the categories that we are entering or we have entered in the last 3 to 4 years are having higher gross margin compared to company average, and this is one of the factors which is also helping to pull the gross margin up. Because as their sales are growing, obviously any new category you get into, earlier the contribution was 0 and it is progressively growing and it is having a positive impact on the mix. The other thing is also, right, as the building segment growth is slow, category like wires and, all the, would grow slower, which has a lower margin, and, the other categories, appliances, which have anyway higher gross margin compared to cable, will also grow. So I think, it's more a directional response.
Okay. And then my second question is, pertaining to stabilizer segment. Now the stabilizer segment have remained, almost flattish, or say, for the 9-month FY20. We have witnessed in the air conditioner industry in the last, 9 months, they have grown by double digit, obviously on a low base. So I just wanted to know whether, the stabilizer business is not growing because of our LED TV segment, or it is also due to the is it there in the AC business also? The decline is also lower growth in the AC business, AC stabilizer also.
Actually, YTD 9 months of this year, stabilizer has grown 12%, which is in line with what you are saying, the AC growth. It's Q3, which was like 3%, but that's a small, relatively small season for stabilizer. The first half, the growth was much higher, so YTD is like 12. Within stabilizer, the AC segment is growing well. This year, the television segment has been impacted by the, of course, huge, I think it has impacted all television brands as well. The LED TV segment is the one that is not grown. YTD, like Sudarshan said, is 12% plus revenue growth for stabilizers.
Okay, great. And then my last question is pertaining to your capex plan for the coming years, if you could share that.
We expect capex to be around 70 crore levels.
This is for FY20. FY21 you are talking?
21, yeah.
Yeah. Okay. That's all from my side. Thank you.
Thank you. The next question is from the line of Naveen Trivedi from HDFC Securities. Please go ahead.
Yeah, hi, good afternoon, everyone. Sir, in the non-South market, if I look at 9-month performance, you delivered around 4% growth. So could you please share which southern markets you have seen stress during the 9 months, and in your medium-term double-digit guidance, how much do you expect from the southern market?
So non-South first 9 months has been about 10% growth, and South has been about 4%. Sorry, what was your question again?
So my question is, which all part of the southern market you have seen stress, and when you say medium-term guidance or double-digit growth, how much growth you built for South market?
Okay, so I think traditionally the South was growing at about 7 to 8%, and non-South was growing at about 22%, and that's how the average 15% growth was coming in. So we are expecting it to go to that, kind of a range, which was the range which we were having before, the slowdown started. If you look at South, all of them are impacted. I mean, there is no one that is impacted more. But I think Kerala is, of course, one that is impacted for us. We also have some impact in the Andhra region, again, where there is a lot of issues with, the new government coming and a lot of new, changes in policy, which has negatively impacted the construction industry in Andhra area. And also in Andhra, again, there is a sand mining ban or something like that. So again, construction is not going on. So between South, the more impacted is the non-Hyderabad area, that's Andhra area, and Kerala. Both are impacted.
And if I look at your strategy on a consumer business which you started like 2 years back, and if I look at your space spend during the 9-month time, which has moderated a lot during this time, so how should we see the strategy going ahead with respect to, because your focus was more towards the traction from the consumer business?
I think our ad spends are, if you look at the average ad spends, it is to the level at what we always used to do. I think if you compare with last year first quarter, we still had some spillover of the brand relaunch campaign. So Q1 of last year, we had a very high base. That is why if you look at YTD, it is looking a bit low. But you will see that Q2 and Q3, our ad spends have been going up, and that, that will continue to do so.
And lastly, on the water heater side, your business has done well this season despite winter was delayed. So how was the market growth, or is it largely because of the market share gain, or the market also supported to you?
So two things, right? So one is we had the BIS standards coming in for gas geysers, and we had some significant loss of business before we could source locally from what I would say a vendor who had the certification. Yeah. I think in the marketplace, certainly business has continued to transact, and there have been supplies. But at our end, we have, restricted supplies, ahead of the standards coming in. And so there was some sale loss for us. I think on the water heater business, 3 to 4% on the overall business would have been the loss, because of our inability to feed the gas geyser in the market, which basically happened in Q2 and early part of Q3. So I would say that 3, maybe almost close to 4% was the kind of growth impact because of this is one part. Second part is, there has been significant, what I would say, competition, which has been coming because of, more and more players getting into water heater category. And this has been a phenomena which has been happening since last year. But I think this year the growth in the category has been slower. And that has also meant that, the pressure on pricing has been more. Yeah. So we had, taken up our prices towards the end of last season. Yeah. And, the impact of that had come into the market. But I think that, many others had not corrected the price in the face of, the expanded competitive environment. And subsequently, we saw one of the major players towards October, correcting price, aggressively across water heater, fan and the pump. So in South particularly. So some impact has come from there also. Though I think that, towards the later half of the quarter, we have protected our interest. So I think there is some slowdown in water heater category, but, not, I would say, not all the challenges are, explained only because of slowdown. I think also that the shift, from traditional trade to modern trade and e-com, that has also happened in the water heater category. And, some players may be over-indexed or some players may be under-indexed, to these channels. And, that is also partly explaining the, slower growth.
Okay. Thank you so much and all the best to you.
Thanks.
Thank you. Any participants who wish to ask a question at this time, they may please press star and 1. The next question is on the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, thank you for the opportunity, sir. First, with respect to solar power pumps, the budget talked about further push in terms of the solar power pumps. So, A, if you could help us understand how significant this opportunity was for the industry as well as for us. And B, do you see any significant change or growth coming in from solar power pumps?
I agree. Yeah. So the solar power pump initiative will more support the agri pump segment of the market. Yeah, where we are less focused. Our focus is more in the domestic segment. Where we are more focusing on pumps which are going into the domestic segment.
Right. How much would be the contribution of agri pumps in our overall pumps?
It's negligible.
Not even for 15. It's about 10%. 10 or 15%. 10 to 12%. Yeah.
Got it. Second, with respect to the margin differential between South and non-South, could you possibly elaborate a bit with respect to how much is the difference now and how do you see it over next, let's say, couple of years? Would that help in terms of EBITDA margin improvement as well?
There's not much difference left between South and non-South margins where they are sort of nearly converged. What happens is there is always some difference because we sell different mix of products in these regions, but that's going to remain as such. But otherwise, it's there's not much of a difference in terms of pricing or terms or whatever.
Even at EBITDA level, sir?
I think EBITDA is a function of growth. I think as the non-South, so it's a function of growth, and I think and scale. So if we are able to grow faster in non-South than South, then definitely the EBITDA should converge. I think right now our EBITDA margins are comparable and decent in East. Yeah. I think in the coming 2 to 3 years, we will be, trying to, we believe that, it can get better and closer, as far as North is concerned, and West will take a bit more time because the competitive environment is, different in each of these 3 regions.
Got it. How many products which are currently being distributed only in South you think you would be able to introduce in the current year, rather FY21? And how much is the contribution as of now in terms of the South revenue for these products?
See, the main products that we have not introduced in non-South in a very large way is the kitchen appliances, which we are now rolling it out. Switches and switchgear is another one. Again, so both these products, gradually we are rolling them out. I think switches and switchgear, we are in the process of launching them in East and North. Kitchen appliances, again, launching in the markets of East. So, potentially, today we are doing about, last year we did about 70 crores of switches and switchgear business, primarily from South, and about 100 crores of kitchen, again, only from South. So, we believe that at least, double of this can be achieved from all the other zones put together.
Correct. Great. Just a clarification with respect to, for the quarter, particularly with respect to water heater, you mentioned that, a competitor, actually a large competitor, did resort to aggressive pricing. Have you also responded, and what is the volume growth, let's say, for the third quarter as well as the 9 months in case of water heater specifically?
So I think towards the later part of the season, we have responded to some of these pricing actions, but obviously not to the extent because the price differential is 15 to 20%, which is too large to bridge, and we are not interested in losing our margins. So we have not responded to each of those actions, but some of those actions in some markets with some consumers, large key accounts, we have responded. That is one. In terms of volume growth for water heaters, there is a price growth of 2% built into the value. So volume will be about 9.
Okay. That's for the 9 months, right?
No, I'm talking about the quarter.
Quarter, okay.
9 months will be lower.
Okay. You're talking 9 months water heater, the volume growth may be only 2 or 3% because we had a very bad Q1 and Q2 because of aggressive. Two reasons. One is the pricing issues in the market. Second is we have lost at least 3% growth because of lack of supply for gas water heater, what Ram earlier mentioned.
Right. How much is the contribution, sorry, that's my last question. How much is the gas water heater in our total portfolio, sir, in terms of...
Gas will be about 20% of sales of total water heaters.
Okay, great. Thank you so much. I wish you all the best.
Thank you. The next question is on the line of Manish Agarwal from Edelweiss. Please go ahead.
Sir, the ceiling fan category, the budget increased the duties yesterday from 10% to 20%. So, do you see any, market share gain in that from the smaller players who actually imported from China?
So, I think if you look at India, most of the ceiling fans are made in India. Very few, little is imported. The table pedestal and wall is what is imported into India, and that's roughly 35% of revenue. So, barring I think very few players, barring I think 1 or 2 players, most of the companies are importing table pedestal and wall fans into India because we don't have the manufacturing ecosystem in the country. So that impact will be there for the entire industry.
So, can you give us any ballpark number? I mean, what percentage will be ceiling fans would be 10 to 15% will be imported, or even not that?
Ceiling fans maybe less than 5% is imported. The only fans which are those expensive fans above 5,000 rupees are usually imported, and they are less than 5% of the market.
Achha, okay.
Ceiling fans, the impact will be very minimal. Impact will be on the table pedestal and wall, which is 35% of the market.
And so if I would want to break up the entire fans market into ceiling fans and others, what would be the broad breakup if you could have?
So I think about 65 to 70% is ceiling fans, and about 30% is all the other types of fans like table, pedestal and wall.
Okay. Thank you, sir. That's it from my side.
Thank you. A reminder to our participants, anyone who wishes to ask a question at this time, they may please press star and 1. The next question is from the line of Sonali Salgaonkar from Jefferies. Please go ahead.
So thank you for the follow-up opportunity. So only one question, how much percentage of our sales are through e-commerce and modern format for us?
Yeah, I think e-commerce, in e-commerce relevant categories, that is, if I remove wires, switches and switchgear, we should be about 4 or 5% of our revenue will come from e-commerce in those categories. Yeah. Modern trade is small, mainly, in stabilizer. Yeah. And there, we might have about, 3 or 4% of our stabilizer business coming from modern trade. And the regional specialty, which is also part of organized trade, I think there, we have a decent part of our revenue coming from there. Though I would say, it is still under indexed to the market.
Understand, sir, because in the result presentation we had said that, we are focusing on e-commerce from here on. So just was keen to understand what are the steps.
Yeah. So obviously, I think
this 6% was like maybe 2% 2 years back. So it's actually tripled in the last 2 years.
No, but we are also, what we are saying is that, we are going to shift our resource to participate in this opportunity, which hitherto, we have not been focusing in the same way as we are focusing on traditional trade.
Understand, sir. That's from my side.
Thank you. A reminder to our participants, if you wish to ask a question, please press star and 1. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference over to the management for their closing comments. Thank you, and over to you.
Yeah, I think we have no further comments. I would like to thank Ashish and Ambit for hosting this call. Thank you all for listening in.
Please subscribe and press the